good evening and welcome to the Australian Stock Market Show. My quote for tonight comes from Jonathan Sachs, who said, "The wisest rule in investment is when others are selling, buy. When others are buying, sell." Of course, what occurs is that the masses generally do the opposite of what is wise as they form part of the herd. Quite simply, when everyone else the herd is buying, investors assume they must know something they don't. So they join the herd and buy. Then the herd starts selling, panic sets in, and the cycle repeats. In the spirit of being a contrarian and doing what is wise, through looking to buy when the masses are fearful. Tonight, Dale and I, in our no BS approach to all things stock market, are going to take a look at three important commodities, lithium, gold and nickel, and we will share our current thoughts on the best stocks in the areas that we're talking about that are trading significantly lower. And we'll share whether now is a good time to be a contrarian. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you?
I was just listening to that voice of yours. I'm thinking, why are you taking newsreader lessons or something? Because they're all got deep voices.
Well, look, I'm trying for that.
You are.
You know, you and I, between the two of us, how many injuries have we got at the moment?
Lots. I've got my bung finger twice, a shoulder, my hip, my something else. I forget what else I've got. And my thumb.
Yep.
I had always masses of it, and I don't know how I got any of them.
That's amazing, isn't it?
Well, I know how I got that one.
Do you sleepwalk?
No, I don't sleepwalk. What injuries have you got other than your voice?
Well, I've got a sore hip. I've got a frog in my throat and
a frog in your throat
eye.
And a bung eye.
And no, Dale didn't hit me either. So
a frog in your throat?
Yes.
Oh,
so I don't have any symptoms.
Well, you don't have a grand final to sort of put the blame on for yelling. So who were you yelling at?
Oh, I don't know, but I started to cough earlier and I thought it might have been your aftershave.
I think I'm going to give your cousin a call after this show. Cool. Anyway, well, before we do get into our first segment for tonight again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask us a question that has been on your mind, then this is your opportunity to pick up your phone and call us now. We generally want to support you, so please show your support for us, our show and our channel. The number you need to call is 0392909988. That's 03 for Melbourne, 92909988. Now to get things started again, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. And so make sure you pick up your phone right now and get dialing.
While we wait for you to call, it is the second Tuesday in the month, and this means we take a look at the Australian market sectors. So let's get into the charts.
All right, so we've got the Australian sectors on a watch list there, as we normally show people. So that's yearly, is it?
Yes.
I'm guessing it because of the big prices, big moves on the other side, on the right-hand side.
Yeah, look, you're right there.
Which is closer to me so I can see it.
Yeah. Well, I don't need glasses that badly, so I can still see from here. And I get quite excited when we cover this area because I like to see how the sectors are performing. So energy is actually up 39% for the year, which is holding really well. We're going to go to a chart of that after this and have a good look at it.
Okay, cool.
Of course, some of the big energy stocks we've got, Woodside's one of those, which has been doing
really well. Santos is another one.
Holding up well, yep. And then we've got the utilities, which are just above the neutral zone. So apart from these two sectors, everything else is in the red zone. Materials is slightly under, down 5.36%. Financials is following -8%. We've got consumer staples down 9%. And then industrials down 10%. So healthcare, which, is probably a bit of a surprise to you, thinking that healthcare would be down as far as it is, but healthcare is actually down 10%.
Wow, that is a surprise to me. I mean, you'd think healthcare would be doing much better nowadays at the moment, with so many people in hospital, all those sorts of things.
Trying to catch up.
Catch up, all the tests. I know my doctors want me to do multiple tests. He goes, well, you need to catch up and do these tests. I went, thanks.
Trying to build his budget.
I really don't need that many tests, you know what I mean? I think we oversubscribe tests, but... But anyway, I'm surprised that is not doing as well. Okay,
communication services down 16.7%. And consumer discretionary has been hit really hard with all the talk of inflation and
Yep.
interest rates rising and how that's going to affect the consumer, it's probably going to bounce back quite strongly at some point. But information technology down 34%.
They're still quite heavily down, isn't it? And it's interesting because, people complain about our market this year and everything else, but materials and financials are really not much in the red. And that's really why our market has performed okay this year, even though it's been flat.
Yeah.
It's still not bad. I mean, imagine if materials and financials were both falling heavily.
Oh gosh, we've seen that before.
Yeah, and they've been holding our market up, and those two sectors are pretty much been stopping us from falling into that sort of, big. We're in a bear market, yes, but not into that crash territory, basically.
Yeah, the banks have actually held up quite well, so I'm really quite impressed with how they're holding up. Material stocks sort of a bit mixed basket there, but BHP's been holding up well.
It has been holding up well. I think BHP.
We're going to talk about that tonight.
We're going to talk about that tonight. Okay, so we're going to show BHP tonight. So we're going to look at a couple of charts. So we're going to look at which one's energy.
So look, first of all, just talking about the sectors.
The financials we're going to look at.
We're going to look at the financials chart just to see how that's tracking overall. I mean, it's really done nothing for years, really, overall. But we really need to see financials break up above that prior peak, which is of 2 months ago. And that would be a nice little start for the rise if we saw that move. But still, it's in a bit of no man's land right now.
Yeah, it is. It is. I mean, interesting, it's still below. It's 2015 high too.
Yeah.
Which means to me that says there's a lot of
here,
movement for the banks moving forward when they really do start to hit a trend.
That's right, yeah, absolutely. And then we've got materials as well, which I've said before on the show that it just amazes me we're still below the 2008 high.
Yeah.
With a lot of the stocks and including BHP, which has been sort of trading around those levels. It's been through that level of its high, but we can see that FMG, Rio's been down. So that's all reflective of what's happening with those big miners there.
Yeah, I think this is, a lot of people don't look at these big picture things when they don't see that what we actually see in our market. They're just going, well, we're going to follow the US and we're going to tank. But our market has not been following that sort of stuff, is it? I mean, the US market was so much more bullish than ours.
So how many sectors would you, if you're talking to someone about a portfolio and constructing a portfolio, how many sectors as a minimum would you suggest that people have exposure to?
Look, I'd suggest 3.
Would you?
Yeah, I'd suggest 3. I'd say at a bare minimum. I think putting all your money in one sector, I mean, even though I'm not a big sector person, as we talked about last week, but putting all your money in 1 or 2 sectors is probably a little bit higher risk because, but I would probably do 3. Minimum, I'd do 3, but I wouldn't necessarily have all my money in all sectors. I definitely wouldn't do that either. It's about, like we talked about last week, it's buying stocks that are going up and not being in stocks that are going down. That's pretty much what it's about.
Yeah.
And, if materials and financials aren't performing, then I'm not going to be in them. I'll have stocks in other sectors. But generally my portfolio will have, at least 3 sectors within that. But again, I'm not looking at that either. I'm just looking at good stocks in different sectors to spread risk, but I'm actually looking at good stocks. Is number one priority. Is that stock going to provide the growth and the income that I'm aiming for whatever portfolio style I'm looking at?
Yeah, okay.
Because I run multiple different portfolios, and we do. So it's about not looking at every stock. It's just finding the right stocks for that portfolio.
Yep, that's
narrow
really
the focus.
Wise. That will help people a lot. Well, that is it for our thoughts on the Australian market sectors. Now it's time to get into our first email for the night.
Okay, our first email question is from Brett, who says, "Hi, Dale and Janine. I would really appreciate your thoughts on Newcrest mining at the moment. It has been in a downtrend though. I am thinking this could turn around soon as the price of gold seems to be on the rise. Could you check this stock out for me? Thanks, Brett."
Well, actually, Brett, you must have read our minds because this is actually one of the stocks that we're going to cover in tonight's topic. It's a big top 20 stock, Newcrest, which when you look at the volatility of this share, you wouldn't think so, would you?
No, you wouldn't think. Something that's that volatile, you wouldn't think, that it's a top 20 share. But look at it. I mean, it's been going down for a number of years, hasn't it?
Yeah, if we just have a really good look at the monthly chart, we can see that it's well down from its high, but it still has failed to recover through what happened here in the 2010 period there where it traded through to a new all-time high. It broke that GFC high, but still we're well below that level now. Let's just have a look at that percentage there from its all-time high. It's actually down 60% from that level.
And it still doesn't look strong to me. It still looks like there's maybe further to go. And would you, probably the question is would you necessarily think, well, if gold's going to find some support, this thing would go up?
Well, I'm not telling you now.
Oh, you're not going to tell me now? It's
No,
a
I'm
secret.
not revealing the secrets right now.
Oh, jeez. Brett wants to know. So he's going to have to watch the whole show to find
Look,
that out, is
okay,
he?
I'll give you a little bit. If gold moves in value, it doesn't necessarily mean that Newcrest is going to move the same way. And you'll see that from the gold chart. As soon as we get into the topic, you'll see the difference between Newcrest and gold.
Yeah, there's a lot of variables to make the stock price move. That's what you're saying, isn't it? Not
Yes.
just looking at whatever gold's doing. I'm not suggesting Brett's doing that. I'm just saying right now this stock at the moment looks bearish still, and I need to assume it's going to keep going down
That's right.
until eventually stops falling. But it looks pretty bearish at the moment, you know.
I think
Cool.
you're right there.
Is that it for Newcrest, or do you want to say any more?
Oh, no, that's all for Newcrest
Okay,
now.
so we've got a caller on the line, Janine. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
You've got Karen.
Oh, welcome to the show, Karen, and thank you for calling up. Janine's excited when a lady
Yay.
rings in, so you can hear her in the background. Cool. You have a question for us tonight?
Yeah, I've been watching Tyro.
Yep.
I don't own it at the moment, but looking at the monthly chart,
Yep.
I probably should have bought it a few weeks ago.
Yep, it's been going up. That's correct.
Yeah, I looked at the monthly chart and I probably should have bought it back in July.
Well, you didn't, but that's okay. We can have a look at it. Are you looking for more short or long term?
Medium to long term.
Medium to long term. So you're a bit of a low risk investor. Is that what you're talking?
Yes.
Okay, fantastic. Well, thanks for calling into the show. Janine's going to have a look at it right now for you.
Actually, Karen's only probably a few weeks away from where it would have been a really nice entry to buy it anyway.
Correct.
So she's not too far away. And this week it's actually turning down. So I know that we don't normally look at the daily chart, but I'm just having a bit of a sneak peek there. You can see that there's this huge gap, and I just want to double check there that sometimes we can get adjustments in data and it doesn't get reflected directly on the price chart until we just make sure that it is. So that's always important. When we teach students coming through our courses, we always tell them to make sure that the data is actually current as the first thing. So I can see that there's some big gaps there, and I guess that would be on my mind with any little volatile stock like this. But in terms of upside, I think more medium term, it's got potential, like she's saying.
Yeah, it has, and I know when stocks take off. I mean, if you look at this stock, if I put my glasses back on, you can see here it was around 60 cents and it's gone up to more than doubled in price over the last 2 months. And when you see this, we do get a lot of people calling up about the same stock or emailing in because they've seen it move so fast. And as she said, she could have probably bought it in, back in June, as she was saying, or back through here. But that's a real high risk area.
They won't appear on those sites, websites saying, oh, this stock's doubled in value or it's gone up significantly. And, when they have, then people are looking at it. It's like yesterday's news, isn't it?
It is, and that's what people do. And I'm not saying Karen's done that. It's they watch YouTube videos or they go onto these chat forums and then they see these stocks that everybody else is talking about, and they've already run their race, and it's up over 100% right now. So what's the percentage chance it's going to keep running at that speed? And the answer is probably low. It's probably not going to keep running at that speed. And it is in an area, this does those payment like machines on your counters, like your Squares and your FPOS machines and stuff like that.
Yeah.
So, to me, I'm not sure why it's running, but I wouldn't be surprised to see this come back for a few weeks, and I think you probably get a really nice entry.
It'd be perfect if it did come back for a couple of weeks. Yeah.
Getting in there around there, Karen, is really high risk. So, you're good to wait to make sure it has stopped falling. Otherwise, you could be catching a fall in life, like some people through here that would have done all of that. But
the other side of that too is that sometimes when students come and they do the courses and they find stocks that they want for their watch list, and all of a sudden they look at these stocks and think, oh, that looked like it triggered some weeks ago. Can I still buy it?
Yep.
That's always the question, isn't it?
It is a question, and the thing is, there's always a chance to buy a stock, and it's just about what is the right time to buy a stock, not just buying it because it's gone up.
How far from where it actually triggered should I buy? That's the question, isn't it?
Yeah, but
that depends on a lot of things in terms of the bigger picture analysis. So, I mean, there's a fair amount of risk involved in these sorts of stocks, and that's what you're alluding to.
Correct.
But if this stock has got the potential that I think it has, it should be fine medium term. It's just going to be
It should
volatile
be.
in the
Yeah,
interim.
it's just going to be volatile till it really gets going because it's in a space, and it's in a growth space. It's in that payments type of space. So it's looking
So what
pretty
you're
good.
suggesting is wait, she's got to make her own decision, of course.
She's got to
but
make her own decision.
She's
but it's-
wise in being cautious.
Correct,
Yeah.
absolutely. And I don't say that she's wrong in looking at a stock like this. I'm just saying it's too early to buy in June, and it's probably a bit. Now I think I'd wait for it to come back a little bit and then give us some strength. But if you do want to be like Karen and give us a call, remember the number 0392 9099 88. I know Janine's excited to talk to you, so please pick up the phone and give us a call now.
All right, before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is from Danny. Good morning, Dale and Janine. Thank you for the awesome podcast and education series. We think you guys are the best and love Dale's blunt, don't beat around the bush approach. I don't know, sometimes, I don't know. And we just love Janine. Oh, thank you. The big brains and the most rational analysts, thank you. I have opened stockbroker account for my 9-year-old daughter. Oh, how wonderful. Under her name, me as guardian. She has $3,000 that I have saved from all her birthday money over the years. Plan is that she doesn't touch it until at least 18 when my name is removed off the account and it's hers to trade. Would I be better to buy $3,000 of VAS to start or split $1,500 into 2 stocks, say BHP and Macquarie, all dividends to be reinvested and let it sit? Add to every time she has another $1,000. I know you guys don't like ETFs or dividend reinvestment plans, but this is something I do not want to actively manage or interfere with for tax purposes. Keep everything nice and clean going back into her name, a true buy and hold for the long term for a child. Your thoughts would be appreciated, Danny.
Interesting question, because I'm really torn about answering that one.
She
She hasn't put me, that's... Because I look at it and go, well, the logical thing is just to buy VAS, you know what I mean, and just an index fund, tracking the top 300 stocks, just put the money and add to it as you get more money. So that's probably the easy answer. It's not the best answer, but it's the easiest answer. And, actively managing a portfolio is always smarter and wiser because you've got to, the question is what is the outcome that you want? Do you want it to have a bigger nest egg or better nest egg by the time she hits 18? And do you want to continue to manage that once she's 18? And to me, and I know what Janine's going to say, is that this is a great opportunity to teach your daughter, to work with her, and both of you have a look at it on a monthly basis. And my suggestion is buy great shares and then add to them as you do that. And as you get dividends into the bank, and they'll build up with other savings and then go, because it's not going to cause any issues for you for tax. Because as long as you've got the bank account in her name, children are allowed to earn so much income per year, and she's going to be a long way off of that.
You talk about minimum 2,000, don't you?
Into a stock, no, 1,000.
1,000.
1,000's fine. With the low brokerage now, 1,000's fine. So she could buy 2 shares and then buy another one and buy. And as long as it's buying good top 10 stocks at this point in time, but this is such a good opportunity to teach your daughter such good money management skills and investing, and get her interested in something that's going to help her for the rest of her life. And to me, that's why I'm torn, is because buy and hold should never happen. It should never happen in anybody's portfolio. I know some people will argue with me, but the market continually proves that buy and hold is not the way. And stocks that we show every week basically prove that buy and hold is not the way. But to me, there's such a big opportunity here that her and her daughter can have a really close relationship in doing this. And I have had fathers and daughters and mothers and daughters and mothers and sons do this together, and you did it with your mum, and you get such a close bond and you get excited about looking at things. And I'll shut up and let you talk.
I think you've done enough. That was awesome.
Okay.
I don't often say that to you, do I?
No, you don't often say that to you. You normally give me a hard time about
I was
something.
almost crying then.
Were you? But I just think it's such an exciting thing, and I think it's fantastic that she's doing it. But I think, to me, it's missing some of the opportunity there, if you know what I mean. And there's so much opportunity for there to work with your daughter and to help her, build up capital. And as she starts with maybe part-time jobs and adding that to it, because she could buy her own home or pay off her home really quickly if she was doing this right now.
Great.
And really doing it anyway.
How exciting.
But I think we need to move on, don't we? I think we need to get to our next question, which is from Anthony, who says, "Hi, Dale and Janine. Firstly, I absolutely love the show and am currently partway through Dale's books. The current in both the content in both is easy to digest and tremendous at the same time. My question is in regard to Mineral Resources, as it has been on my watch list for some time and has had a fantastic run over the past few years. I'm a relatively young investor, 21 years old, and I'm setting up my portfolio for sustained growth over the long term, 7 to 10 years. I was recently drawn to Mineral Resources from a fundamental and macroeconomic standpoint, as I believe they are in a position to become one of the top 5 to 10 lithium producers in the world. I was hoping to call upon your expertise to provide me with some insight into where you think the stock is positioned from a technical perspective, as the price seemed to have gained some momentum and is heading towards its all-time high. I would love to hear from you, Anthony.
Look, I think depending on who you talk to, this stock has already made it into the top 5. Definitely top 10 anyway. And if you just look at the chart there, you can see that of all the lithium stocks, this one is actually looking quite good at the moment.
Yeah, it is looking good. I think it's fantastic. He's 21 and he's writing emails like that, Janine. Seriously, if I was, all I was thinking at 21 was girls and surfing.
Right.
Like, seriously, I wasn't thinking about stuff like this.
Yeah.
So I reckon that's pretty... I take my hat off to him, because I think looking at stocks like this and trying to understand the market is super.
Yep, I like the stock. It's actually on our list for the topic tonight. You know what? Some of the stocks in our topic for tonight, I was really careful in selecting those. Some of them we haven't covered before.
We're always careful at selecting stocks.
Look, sometimes I just pick the biggest ones in the space because we want to keep people in the most liquid stocks.
And we should.
Looking at the
That's
most
being
liquid
responsible.
Stocks. And other times I put in a few smaller ones as well. But this is a really good, solid company, and I really like it. There's a lot happening in this space at the moment, which I'll talk about when we get into the topic, but good choice.
You don't want to talk too much about it, that's what you're telling me.
Look, so far we can see it's going up.
It's going up, so both on the weekly and the monthly chart,
it's just gone to a new all-time high recently.
It's recently at its new all-time high, which is through here, so that was that all-time high price there, 75.65, so that was in September. Had a little bit of a dip, but the market was going down for 6 weeks, so this thing's held up pretty well. And now it's looking good now. Last week the market took off and still doing okay, isn't it?
Yeah, the question is whether, and this is what I'm going to get to in the topic, is whether it's actually run its race or not.
Well, that's what I was going to look at. I mean, looking at volume, it's not necessarily giving me the super exciting thing. Yeah, it's going to keep going on for the longer term. But I'm not going to say too much. I'm going to keep my mouth shut because you're the, what do you call it? You're the wise one who's the great analyst. I'm just the no BS guy.
Yeah, right. No BS. Fantastic.
All right, well, Janine, I think it's now the time we get into our topic for tonight. But before we do, now I think it's time for everyone to give the show a really big thumbs up to show the team that they like and appreciate all the work that goes into producing this show each and every week. And let's see if we can push that like button right through the roof. I know about 90% of the people watching our videos never hit that like button, so maybe it's your turn tonight to hit that like button and show everybody how much you like what we're doing and supporting the show. But tonight's topic, Janine, is all about 3 important commodities: lithium, gold, and nickel. Now, we all, sorry, I'm getting a bit tongue-tied tonight, aren't I?
Would you like a drink?
Oh, I think I need a drink. I haven't had one. We do enjoy in sharing our thoughts on commodities, and Janine loves sharing her thoughts on commodities. And you will know that we regard this as such an important area for every investor, given the Australian market really is largely driven by financial and commodity stocks.
So true. And the big question I think that our viewers may want answered is, given the market may have stopped falling, is whether now's the best time to gain exposure to commodities like lithium, gold and nickel, especially as some of the best stocks are well down from their highs. So our intention is to update you on our outlook for lithium, gold and nickel. And as you know, I always plan to take a look at stocks. So tonight's no different as we look at some of the best ASX lithium, gold and nickel stocks on our market. And I know from your comments that some of these are your favourite companies.
Indeed. Now, in previous shows, Janine, we've talked about these commodities as they really are an interesting area, and we know how stock prices are fluid, and this is even more so when markets are volatile, as is the case now. So it's important to stay on top of the share prices of these companies if you are looking at investment opportunities.
Yep, and we all have to keep in mind that there have been new discoveries of nickel and lithium, and any new discoveries will require a review of the supply and demand equation. We shared back in August on one of our shows how battery-powered EVs will amount to around 20 to 30% of all global car sales by 2025, and this number could reach around 50% by 2035. But recently on Bloomberg, it was announced that just over half of all cars sold in the US in 2030 will be electric vehicles, which is huge.
Seriously? What about all those big, shiny truck things that you see in the US? You know, those ones that take up 2 car parks and you can host your birthday party in the back of it? I mean, I wonder what's going to happen to those.
Yeah, I'm sure they'll one day be seen in a future series of classic cars magazines. Interestingly, the thing is that the price of classic cars goes through the roof in the stock market boom, and then when the bust hits, you can get them at a significant discount. So wait for that if you're a car enthusiast who likes to hear the engine when they drive.
Sounds like a good place for me to be. Wait for the stock market to crash. I mean, you were a bit of a petrol head in your day, weren't you?
Yeah, well, we didn't know better. Now we do, and I'd be happy driving a scooter if they designed one so that I wouldn't get wet. I like the ones in that movie Tron.
They were motorbikes, Janine. I'm sure you could ride one of those. I mean, you don't know what you're missing. Now, the wind in your hair, bugs in your teeth, Janine.
Oh, yuck. I'd rather an electric car. There's more protection.
Where's the fun in that, Janine? I've never heard an electric car that gets me excited, but I think it's time we got into this discussion on gold, lithium and nickel.
Yeah, before I burst out laughing. I'd like to start with a discussion on gold because this is the least exciting commodity, but still interesting, and I want to build up the excitement to talking about nickel.
Now, I thought gold would be your favourite commodity, Janine, as most of the ladies really like gold.
Dale, let's not make this about the sexes again. Gold is gender neutral, so plenty of men wear gold. You could get some gold teeth, you know. The extra bling would look good on you.
Bling. You know, I like nice watches as they've got to actually have a function. They actually have a function, watches, and not over-the-top jewellery. Now, can we finally get into the charts before you lose it?
Okay. I just was imagining you with a Kanye West look.
Kanye West?
Kanye West. I'll get into the gold chart. Our short-term target for gold was around $1,600 an ounce, and it has fallen to around that level, around 22% down actually so far. The low is around $1,613 an ounce. My forecast indicated it was probable for gold to rise from around this level, at least temporarily, with the potential to eventually trade to a new all-time high to around 2,300 points. The possible rise is shown on the chart as a dashed line.
All right. I detect some hesitation there, Janine. So what's the but?
Yeah. We know you always need to have more than one view in trading, right? So there could be a short rally which is shown as a solid line, but if gold fails to take out the high, the worst case scenario becomes relevant. And for any of our students out there, you know what I mean. We could expect gold to trade much lower.
Okay. But the move's not been confirmed yet.
Yeah.
Okay, so let's provide an update on this down the track sometime. Well, I want you to promise to do that for everybody.
That's a good idea.
Okay, so what's next?
All right, we've got lithium.
Okay.
We talked about lithium on our show in May.
I've got to change the chart first, Janine. Hang on a second. There we go. I'm not that fast.
If you've not seen that show, do so. This time I decided to discuss a lithium ETF to provide an understanding of what is occurring there. Some lithium miners have shared that as supply increases in coming years, the price may soften, and it's interesting to note that some lithium stocks have raced ahead while others are well off their highs.
Okay.
So on your screen is the Global Lithium and Battery Tech ETF LIT. We can see the price is off its high. It has already fallen 36.5%, and it needs to trade strongly above $77.50 to confirm it will continue the rise. Otherwise, the longer it's below this level, the higher the probability of a further fall. So the message is be patient while we confirm direction. There is a risk of a further fall to between $48 and $60.
All right. Okay. So patience is the go here, right? So do I have to be patient as I want to see the best stocks that you were talking about, Janine?
Hold your horses. First, let's talk about the last commodity, which is nickel. We talked about nickel back in August and the forecast remains unchanged. There is significant potential upside there, rises of between 22 and 53%. However, we still have not seen the low confirmed, which we expect to be in by now. So keep in mind, there is always a potential for a further fall, even if only slight, as most of the declines already has occurred, given the decline was around 60%.
Okay. All right, I have to agree with you. I really do.
You're doing that a lot lately, have you noticed?
I do. Well, I just agree with you again. Sorry, is now the time for the stocks?
Yes. It's time to get into the charts. All right, let's go.
So what are we
All right.
looking at?
So the first one on our screen is gold. It's the gold ETF. Now, remember that gold chart, right?
Yeah, I'm remembering it.
about it.
So
I'll bring
I
it
have
up quickly.
photographic memory.
I'm just going to show everyone else because they may not.
Okay.
So it's fallen, and look at the gold ETF. Now, of course, there can be a mix of stocks in the gold ETF
There
that
is,
can
yes.
have an impact on how that's unfolding
Yep.
and different things that they've mixed in with that ETF physical gold group.
So the ETF is a smoothing of what's going on around all the gold stocks.
So it's a physical gold ETF.
Okay, it's a physical gold.
Yeah. So
Okay.
therefore, it can have a different trajectory than the gold. Some of the gold stocks which we've seen take a big dive.
So this is buying
this
physical gold.
This is physical gold.
So it's not
this
buying stocks that have gold, it's buying physical
it's
gold.
physical gold. So this has
Okay.
been far more defensive
Yep.
as an ETF than what we've seen with some
Okay.
of the gold stocks. Now, because the gold price is actually doing what it's done, and the gold ETF is actually looks like it's rising, this is where we could see a bit of a catch up in the gold ETF at
Yep.
some point. So
Okay.
at the moment it's looking good, but I'm a bit I'm questioning whether it's actually finished the fall yet, or maybe this is a signal that we're going to see gold turn around now, which is what I'm expecting.
Be interesting to see if they put out hedging on the ETF, on the gold ETF.
Oh, look, you have to actually go onto the look at these ETFs and just there are lots of different ETFs. There are lots of different gold ETFs. Some of them have stocks. Some of them have the physical gold.
Yep.
It's important to go in there and read the fact sheets and understand what you're actually looking at.
I know. I mean, I was reading the one on VAS the other week for the market report, and I tell you what, it's like, no wonder people don't understand them.
Right.
Because
Just too
even
much
I was
detail.
like struggling at some of the bits there, and there were some important bits that I brought out for them. But we do need to understand what you're buying.
So
we really do.
I think we should now move
Yep.
on to Newcrest because we did promise to
I
cover
agree.
Newcrest as part of this. So this. I decided to cover the biggest gold stock. I could have covered Evolution Mining,
Yeah.
Northern Star, which have all fallen significantly as well.
Yeah.
I'm not sure, like you, I'm not convinced yet that the bottom's in, but it has hit a level that I identified for the fall, which is $16.
Yep.
So it's interesting that it is actually finding support around that level. Now, for anyone who's interested in understanding how Dale and I come up with these levels, you really have to learn the material yourself and to understand it. So there's a process and it's a structured way of learning to get to this point. So that's something that I really encourage people to do if you've got an interest in this, to just get that for yourself.
Well, they need to learn the secret handshake as well.
Yeah. So at the moment, it may
Yeah.
have bottomed, but you'd wait for more confirmation to see that there's a bottom in there. And at the moment, all we've got is 1 week up off that low, which is nowhere near enough to confirm that, especially with more risky type investments like especially Newcrest being top 20. You would say it's more risky than a bank, right?
Well, you would. And with all the bearishness around our market pretty much all year, or the bearish talk, especially the last few months, you've got to look at this and say, well, is gold really that safe haven anymore if these charts aren't showing a lot of strength in them? Because people
Well, the best way to compare that is to go back to the gold futures price and see how far it's fallen relative to the market. So at the
It's
moment,
fallen further than
it's
the
fallen
market.
further than the market. Yeah, exactly. And if it continues to fall, then that's your answer.
Yeah. So be careful what you buy, basically. That's what you're saying?
Yep,
All right,
be
so that's
careful.
Newcrest.
Okay, so we've covered Newcrest. We've also got the potential low of $12 if it does keep unfolding to the downside, but it could provide some nice short-term opportunity for people who are looking to get in there at this point
Yeah.
when the rules trigger. Now, we said that we'd cover off some lithium stocks as well. this was one of the ones, and we get asked about this stock all the time, which is why I was keen to talk about it. This is the monthly chart. We saw this consolidation happen. Now, when stocks, sometimes they hit their head on certain price levels and eventually they pop through or they fall away heavily.
Yep.
So in this case, it's gone through. There's all this speculation about a spin-off of the lithium division, and that's just really fueling a lot of interest in the stock. And I think when there's talk like that about these things happening, often it is it's probably going to happen, but you can't, you can't sign a check to say that it's happened. You know what I mean?
Speculation.
It's speculation. So there's no money in the banks, so to speak, on that, except that because we've got this volatility and it's actually running with it, that there's a potential for it to break that $80, $82 mark. And I've also got an upside on that of around $90, might be just a little bit over 90. As a possibility, but at the moment, given that it's gone through the all-time high, it's in blue sky territory, there's some positive news supporting it. The only thing is, it's got the mix of iron ore and lithium, which is really good, I think, for any company to have. I don't think it's a good idea to just invest solely in pure lithium companies.
No, I don't think it's a good idea either.
But you could have one lithium company that was there, but you wouldn't want to have a whole...
We know there's going to be a lot of ongoing demand for lithium. It's just going to happen. So, but the point is making sure you're spreading your assets across different stocks and different sectors, because obviously, as you discussed in a few shows ago, I think it was last month, I think, or it was in the last 2 months, where we talked about all the different metals that go into these batteries and there's a lot of them, and lithium's just one of them. So
and the technology's changing all the time.
Correct.
They're always looking for something new.
Oh yeah, there's lots of different batteries out there at the moment, and not necessarily using all the same metals that they use in EV batteries right now for cars. And obviously the big challenge with EV batteries right now is range and the weight, the amount of weight that goes into these things. If they can reduce the weight and the power that output, then it's great.
Yeah, that's exciting stuff, isn't it?
That's exciting stuff.
But this is a good company because it's a top 50 by market cap, and just because of the exposure that it's got. So, I quite like it. I'd have it on my watch list, but I just haven't bought into it myself. I just look at that and think that's an opportunity coming up down the track. But if it peaks out and slows down in this zone, I'd be very cautious about it, because it could thunder all the way back to where it was trading before.
Well, that was my only concern is looking at it, what goes up vertically, and you can see stocks, they just keep moving up and moving up and moving up, and the more vertical they get, the closer they are to their peak.
Yep.
And this is what this one's looking like. So how much longer can it do this?
Well, the challenge with lithium
rise?
is that eventually, as more and more lithium's mined, that the supply and demand equation will change.
And the recycling batteries.
They're already talking about that the lithium supply is likely to match the demand that they're forecasting at the moment.
Yep.
So that could see the price of lithium fall away. So that's something just to bear in mind.
Okay, cool. All right, so we've got another stock, have we?
All right, we do. We have
Well, I've still got to be patient.
We have Global Lithium Resources, which is a smaller stock. Now, you know that I don't usually go for these smaller stocks, but I know you like sometimes for me to have a look at some of these more interesting ones outside the box. Now, it's a little bit more volatile, of course, because of the liquidity, but for an individual trader who's got experience and knows what they're doing, this one's big enough.
Big enough, yeah.
To be able to trade it. But right now, it could... Because of the volatility of this thing, if you just look at what it's done in the past, it could just burst either way. So I'm expecting there could be some short-term downside on it. Could see it fall to around this level, around that $1.80 mark in the short term. If it's finished the fall, then we're likely to see it just track up towards $3.50. So,
well, there's a high percentage. There's more chance of a big gain on this than there is on MIN.
Yeah, because of the speculation around it.
Yeah, there's a bigger chance on that one. I mean, obviously right now it's still a bit, how do I say, it's not confirmed that it's going to go back up again at the moment, which is what you're talking about.
Yeah, I'd rather see it come down. Like, that's my preference, to see it go sideways for a bit or come down, just because of the resistance now that's at that top.
I think that's what a lot of people don't understand is sometimes stocks get too hot and they go up too fast, and then people go, then they need to stall and they need to consolidate a bit to let everything else catch up with them. And because some people think, well, that stock was $1 last week, now it's $3. You know, now I could have bought it at $1, so now it's too expensive, and so it pulls back again. And I think we need to get some sort of support around here and find out exactly where the buyers and sellers are on this. But I do like it.
Yeah, I think it's
a really good pick, so well done.
Yeah, look, I mean, I looked at some of the stocks that had fallen significantly, and none of them, I thought, there's some in, these decent downtrends. And I looked at those and I thought, well, I'd rather put those in a future show when we talk about
Okay.
lithium.
We
Just
will.
wait for them to turn around.
So now we've got moving on to BHP, your favourite stock.
Okay, BHP just looks awesome, doesn't it? I mean, it's still holding up. It's amazed me. I thought it would have been in decline by now, but what I found really interesting was that because these stocks are obviously into nickel, BHP's into almost everything, isn't it? I mean, anything that's important anyway. And I mean, it's going into a whole new space of renewables. We can see that Mincor Resources, which is a smaller company, much smaller than BHP, obviously, but look at the angle and look at the way it's unfolded and then go back to BHP.
It looks very similar, doesn't it?
They're tracking up a similar sort of angle, aren't they? So I thought, that's interesting. And both are holding up reasonably well, but of course, the smaller stock's going to be more volatile. BHP's down 25% from this recent peak here. It's still obviously struggling to move on. Ideally, I'd like to see it drop away. I'd actually really like to see BHP hit somewhere down near $30. That's where I'd like to see it fall away to. But if it manages to hold here, we could see it take out the all-time high.
I think you scared a lot of people by saying that.
At the end of the year.
BHP
Look, I'm sure.
down around.
Sometimes you just need that flush out though, don't you? Just to allow that next move up to happen.
You do, and that's when you get good stocks like this and when they pop off their highs like that and come down, in a really nice orderly correction, that just gets more and more exciting to me.
Pop off. That's sort of not really a term that we want for the show.
It's highly technical. I'm not going to explain it to you because it's probably a bit over your head, but I need to sort of draw it on a chart for you and so you'd get it.
No, I think we better get on to the next stock before
All
I
right,
lose it.
so let's pop off onto MCR, isn't
Do
it?
you have to, really?
Oh, okay,
Oh,
fine.
geez. Mincor, especially when I don't have a voice.
You're going to collect your thoughts now or are you going to keep crying? Okay,
I am crying now.
okay, so...
All right.
Yeah.
Okay, you can see here, now this stock is really interesting. If I just show you the full picture, you can see where it's gone. Now, to someone who studied our courses, you look at that and you think, holy moly, this thing could go anywhere. Just because of the long-term pattern that we've seen on this whole stock here. So to me, it looks quite exciting, even though the short-term it's down. The risk is it could actually fall lower. So, the downside risk with it is that it could fall to 60% before it stops.
Yep.
But if it holds on the angle of this trend and turns around and goes back up and shoots back up through $2 really strongly and even $2.10
That's
around
exciting
that,
then.
it's starting to look more interesting. So I think this one is a watch this space, definitely, that I like. I would have this on my watch list, but it's a smaller stock, so it's not going to suit every portfolio. And this is where you have to be really cutthroat, don't you?
Yeah.
About choosing the stocks. I mean, it's 41% down from its high. It could fall 60. That's the sort of volatility that you've got to be aware of.
Yeah, you are right. And I know I'm working with one of our students in our graduates. He's just starting to trade and everything else. And he asked me to help him with his self-managed super fund portfolio because he'd been put it all together before he started our course, and he's got too many stocks in it, but he's got a truckload of stocks like this. And he finally sent me all the criteria today and what he's going to do and how we're going to exit stocks and really tidy it all up properly so it's really, really good. And he's got some stock, and I'm not saying this one, but he's got these speculative mining companies and everything else, and some of them he's down 40, 50, 60%. And I said, but that's what's killing your portfolio.
Well, it must be a weight off his mind then that he can start to see things in the course and then work out what he's going to do next.
Oh, it is, because he's obviously realised the mistakes he's made and how he's constructed his self-managed super fund, but but I am working with him to clean it up anyway.
Yeah, that's a contrast, isn't it, to when you were talking to me about today that, was it someone you were talking to about?
I was talking to another student who's with a managed fund, a super fund. I think it's like Hester, I think. And a lot of them can actually allow you to buy and sell shares on there. And they're just so hit and miss. They were hit and miss. They weren't a student, but they were looking at becoming a student. They'd read my book. And they're talking about doing a course, and then they were saying, I'm really hit and miss and and I'm not doing well on my portfolio. And then they go, your course is expensive. And I go, so's ignorance. And I wasn't trying to be rude to that person, but a lot of people think, your course is expensive. But then what they're doing, some of these people are spending 10 hours a day or 10 hours a week.
He must be stressed.
Looking at videos and looking at chat forums and and they're hit and miss on their super fund. The super fund is something you don't muck around with. Yeah. That's your future. And you need to know what you're doing. And then people go, your course is expensive, but like that's why I say is how expensive is ignorance, and people don't want to spend the money, but then they don't look at what they're going to gain. And to me, that's the criminal part. They don't want to make a decision because it's like, oh, what if I get into
But I
this?
guess what does learning mean to someone? That's the question.
It means...
But learning means different things to different people, Dale. So
To me, that means freedom.
yeah, I know, but that's why you've got to ask that person what it means to them, because they might not have the same view on the world as you. They might see
They
learning
don't,
as
but
different.
it's like if you focus on what something costs you, then you're not really focusing on the right thing. You should be focusing on where you're going, not where you are today. So if you want to be a successful trader, then don't make the decisions of somebody who's not successful. Make the decisions a successful trader would make. If I said to you, this course is going to cost you 30 grand, Janine, but it's going to change your win-loss ratio to 99%, well, you'd go, yeah, no problems.
Yeah, I think more people would probably do it if it was,
Yeah.
because of the perception of it.
But that's what our course is saying to people. Well, if you've got a pretty poor win-loss ratio, you're not making really any money. A diploma course is dirt cheap for what you're going to get out of it. Like, seriously. And then I've never met a student of ours that says, once they've done the course, that our course is expensive. They've all said they'd pay 2 or 3 times for it because they made their money really quickly to pay for the course. And even our trading mentor course, which is like cheap as chips. And people still go, oh, that's expensive. It's like, seriously?
Well, I just had an email from a lady just recently talking about it, that she didn't know what it was going to be like until she got into it.
They don't understand the experience.
But like I said, that could be out, because how do we really express that to people?
But you
as to how
can't,
it
that's the
makes them
point.
feel
That's
that,
the point. They have to get into it and feel the course and feel the support. Like you and me working with these people and our team. Our team is brilliant. Like the support team around people is brilliant, and they help you get that knowledge that you need, and they push you to get the results that you need. And to me, is sitting in a world where you're unsure of what your trades are, looking at super fund and making mistakes, not realising, not knowing.
I wonder if he's told his wife what he's doing.
Probably not. Some people do. Some people use that as an excuse to get out of saying yes. They go, oh, I've got to talk to my wife. You go, that's fantastic.
Yeah.
But that means they don't want to make a decision, and not making decisions, you've already guaranteed the outcome, which is more struggling and failure. To me, make a decision
How
for
do
your
you know
positive.
that?
Hey?
How do you know the bit about the asking the wife thing?
Because I ask my wife stuff as well, and I use that excuse sometimes if I don't want to talk to somebody, I've got to talk to my wife.
Yeah.
But generally I'm just going, when I talk to a salesperson, I'm really good at saying
You
yes
just
or
say
no.
no, I hear
I'll
you.
just go, no. No, thanks very much, it's not for me, no.
Yeah.
And no's an easy word to say, but most people find it really hard. It's only 2 letters.
Yeah.
But yes is harder to say.
Yeah.
Because that comes with accountability.
That's right.
And that's why people go, oh, I've got to talk to my wife, or it's too expensive, and they throw out that BS excuse. Time is never excuse, and money should never ever be an excuse if you want to have a future. So just make a decision. But have we finished this? Because you've just pushed me onto a track where I'm actually
Look, I'll make sure I
getting
talk to your wife
overheated and passionate.
the next time you want to do something.
You're going to talk to my wife. Have we finished all the stocks?
I think we have.
Do we need to move on?
We do need to move on.
Okay, all right. Well, that is it for our topic for tonight. Now, before we get into our next email, given that you are at this point in the show and you're actually still watching these 2 crazy people on the screen, it means that you like what we're doing. So make sure you hit that big like button. Now, that's the thumbs up thing just down below, so please do that. Let's make this show a big winner on that hope. Now, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. Now's the time to get dialing. The number you need to call is 03 for Melbourne 92909988. That's 03 92909988. And I know Janine has got something super special for the first caller.
I've got something special to say. I haven't just come in here with a bung eye for no reason at all. So don't leave me sitting here waiting. Please call. So while we get into answering our next email, I'll be waiting for your call. All right, our next email is from Latha.
I think it's Iatha.
Iatha, oh, that's beautiful. Hi Dale, please let me know your thoughts on BrainChip Holdings, and is it a pump and dump penny stock? Regards, Iatha. Beautiful. Okay, BrainChip. We've had this question on this stock before.
We've looked at BrainChip before you.
I think just looking at the chart that Iatha's hit the nail on the head. It could be a huge candidate as a pump and dump given the volatility of it.
Well, pump and dump is something that they put out in chat forums too. And obviously you only have to watch. Like there's a Netflix mini series, a 3-part series on Robin Hood and GameStop. It's really good if you've got Netflix. Go and watch it. It's really good. But it shows you investor psychology, herd mentality, and everything else. So I think people should watch that because that's the ultimate pump and dump stock, because that was about short sellers and retail investors and that snowball effect of retail investors in chat forums pushing a stock up and pushing a stock up, and people with not really doing their analysis properly. And BrainChip, I won't say is in that league. It's not even close to being in that league, but it could be a pump and dump stock. A stock, pump and dump stock. That's hard to say 3 times fast, isn't it?
That is really hard to say. You did
I know.
well.
But right now, I mean, she doesn't say whether she wants to buy it or not, but she wants our
regardless
thinking.
of whether it's a pump and dump stock, I mean, you can still take advantage of that if you know what you're doing.
If you know what you're doing.
You know, to be able to get into some of these volatile runs, everything's about pattern. You know, we can see that the stock trades sideways before it shoots off. You know, it trades sideways along that bottom before it shoots off. It's trading sideways now. So it's just about waiting for that next opportunity when it takes off.
Well, it doesn't look good right now, doesn't it? But it might be finding some support around that 80 sort of...
It doesn't look good because if it falls away...
If it falls below this sort of 80 cent sort of level, especially if it falls away below that 76.
But you need momentum to be going with it to choose anything like this, don't you?
Yeah, and, you know, you're seeing this volume dropping off through here. I don't like it at the moment. It's not really interesting to me at the moment. I know people do... I think so many people do this. They want to find good stocks to buy. Now, if we looked at
What's the definition of that? A good stock, I mean, mean, when you say people want to find good stocks to buy, what does that mean to them, to the people you're talking about? You're talking about the herd?
Yeah, I'm talking about the herd, yeah. That's what I'm saying is, like, if you continue to do the same thing over and over again, you're going to get the same results. Like the gentleman I mentioned before, you know, who keeps doing the same thing, trying to, you know, work out and find good stocks, but trying to trade his super fund in that sort of managed environment like Hester, but still
you're talking
turning
about
and burning.
People want to buy stocks that are likely to hit the, you know,
but what is a good
punch
stock?
The lights out.
What is a good stock? And
but that's not necessarily a good stock.
Correct. Correct. And if you look at all of our YouTube videos, the most watched ones are when we're saying 3 hottest stocks, the top stocks to buy today. And we're talking about they're the biggest watched YouTube videos on the planet, and yet they're the worst videos that people should watch.
All the brokers have what are the most traded stocks today, and that's where people are going. We did a show on that once.
That's such a poor way to pick your stocks.
Geez.
It's like a disastrous way to pick your stocks.
Yeah, that's like encouraging people to buy things that they shouldn't be buying, isn't it?
But I don't like BrainChip anyway. But if you do want to give us a call and talk to Janine, because she's really waiting for your call.
I think my croaky voice is scaring people away.
I think that should attract them all, wanting to listen to your croaky voice.
I sound like a frog.
Give us a call, 92909988. Anyway, but let's get into our next email, and it's from CW, who says, "Hi, Dale and Janine. Really enjoy the show, and the friendly exchange between the both of you. Reminds me of David Stratton and Margaret Pomeranz. I have a query. Can you please give your opinion on SEEK, the ASX code SEK? Thanks." CW, David Pomeran and Margaret. They're the two on the ABC that do the movie reviews.
Yeah, that'd be fun.
Are you Margaret or am I Margaret?
I don't know.
You don't know? Because I'm not sure I'm David.
Yeah.
They're a bit too passive for me.
Okay.
I don't know, maybe he gets fired up like I do.
I don't know.
Anyway.
I haven't watched enough.
SEEK.
All right. SEEK, interesting stock, isn't it? Big decline. It's pushed through. What's interesting to me is it's actually taken out this low. So that actually tends to mean that it could actually trade a little bit lower before it finishes.
Yeah.
Before it does anything, it's got to get interesting. It's got to get above this high in August. Otherwise, it's just not even on the radar, is it?
Well, it is, and you can see how bearish it's been. I mean, obviously, this is employment, and we're full employment at the moment. So, pretty much our lowest employment rate in 50 odd years. You know, so, and we've got so many job vacancies, so you think they'd be making money, but then, you know, trying to attract good employees at the moment is a bit hard. So, you know, it's almost pray for a recession so we can find good employees again at a cheap price.
Is that it?
Well, you know, as an employer, you want to get the best people for the lowest price, but now at the moment, you got to bump up your prices to get good people.
Yeah, I think just all manner of roles out there, they're getting higher prices for those jobs, aren't they? Anything.
Yeah, I know. Yeah. But this is looking bearish. Don't like it at the moment. Think it's probably got more downside. What about you?
Look, yeah, I think there's a potential for more downside, and that's the concern given that it's too early, in that move. We just need to see more bars on the chart, really.
Okay, CW, it's more CRAP at the moment.
All right, then. Well, Dale, it looks like we have another caller on the line. Welcome to the Australian Stock Market Show. Who do I have on the line, please? You have Dale and Janine here.
This is Mac from the Gold Coast.
Hello, Mac. How are you?
I'm fine. I hope you will improve your condition from the look of you.
Thank you very much. It's very kind of you. And
You've got a condition.
I've got a condition. Would you mind, please, letting us know what stock you've got for us tonight?
IGO.
IGO. And what's your question about IGO, Mac?
I just wondered how you felt about IGO. I seem to think it's quite a good stock.
Well, look, it is, definitely. Do you actually happen to own this one?
I have some, and I'm hoping to be able to buy some more.
Right. And is this a long-term hold, or is the extra purchase?
Short to medium.
Short to medium. Oh, fantastic. All right, Mac, really appreciate your question. Good stock choice. We'll get into the charts.
Good, I love it. I think it's awesome.
All right. It looks nice, doesn't it?
It trends so beautifully.
Look, we said we had this on the show just recently, and I think we said that the only concern was whether it could actually come back given what it had done, but it seems to have moved on this week a little bit more. It's holding above that high, isn't it?
It's holding above that high and looking really nice after that nice, tiny little, beautiful little pullback through here. Taken off. I do really like this. I think it's got a lot further to go.
When we talked about it in the show last week, or whenever it was, the week before, we were talking about, the concern is if it fell through that low, then it's more likely to continue to fall. But so far, it hasn't come back that way. No,
it's a little bit more sustainable. It is a little bit more vertical than what it was through here, so it is going a bit fast, but for a bit longer period of time. But, you might find it might settle down and go a little bit more sideways or lose a bit of momentum, but I think it's still got more upside to go. I like that.
It looks nice, doesn't it?
Yeah, I love it. Well done, Mac. He's good at picking stocks. His last one he rang in and was really good too, wasn't it?
Yeah, but what do you think about adding to your position?
I wouldn't do that, but then some people do that.
Yeah.
Not here, I wouldn't be adding to that.
Yeah, if you've already got a profit sitting in there.
Especially when you trade short term, to me it's just in, trade, get out, trade, get out, and keep compounding my return.
Okay.
I don't add to positions.
Right.
I normally take I always take the right position size first.
Yep.
And that's just the way I trade.
Okay.
And that's why we teach people. But anyway.
All right.
Each to his own and Mac to his own too.
Mac to his own. Our final email question comes from Nick. Hi team, I started investing in shares in the last year due to poor bank interest. I made a watch list and just watched how shares move for a few months. I own 3. One is Pilbara Minerals, which I bought in May at $2.41. I sold a third in August at $3 and sold another third in September at $4 after hitting a high of $5.61 last week. I'm not sure what to do with my final third. I guess I buy shares in a company because I believe in it. But a fall is inevitable. Any advice would be appreciated. Thanks for your informative show, Nick. Wow, that's a good question.
My answer is you should have thought of that before you started selling a third.
Oh, gosh, really?
What's the strategy?
Well, we have said on the show at some point you can take some money off the table. Take your money, your initial capital off to make sure that.
But what he's doing is not that. That just tells me he doesn't have a proper exit strategy.
Okay.
And what do you do with the last third?
Well, he's just waiting now to see what to do with it. But look, I mean, it could fall away, but he's still got a profit on that, hasn't he?
Yeah, he's still got a profit on it, but I don't know what his position sizing on that. And and when you sold the first and second thirds, you could have made more money. So many people leave so much money on the table because they just do not know how to exit stocks properly.
But it could have gone the other way as well.
Yeah, but that's why you have your exit strategies.
But I think it's actually smart, given that he's not. He didn't say that he's a student or has that knowledge.
No.
But he's just being super cautious rather than being aggressive.
Cautious or just not, it's a case of not knowing?
Well, that's true as well. But, I mean, I know what you're saying.
That's why ignorance can be expensive. That's what I was saying
I know
earlier.
what you're saying, that, everyone needs to learn how to do this sort of stuff, right? And that's true. However, if you don't know at this point, then you've got to have, if you're in a stock, you need to be thinking about how you're going to get out of it. And that's what he's doing. And that's the thing that I think's good, is the fact that he's actually thinking that way.
My point is people don't consider the risk of their decisions, and they also don't consider how much it costs them. For example, if he worked out, let's say he had $10,000 in the original position.
Yep.
what would it be worth today, and
True.
how much profit is he left on the table, because they don't know. And that's what I was talking about
Yeah,
before, is
okay.
people who go, oh, well, your course is expensive. Well, so is ignorance, because you're not capturing all the profit you should, and then you're buying stocks you shouldn't and exiting them at the wrong time,
This
while
is a
holding
good
on to
stock,
stock
though.
falling away. I don't have a problem with this stock. I think it's great. I think it's brilliant.
I like where he's bought too.
I just think his strategy is flawed. And you're right, he probably doesn't have a great level of knowledge, and I'm just guessing at that, and I'm not trying to be rude to him, but it's not a strategy I would employ at all.
Yeah, okay. But look, I mean, you know, now let's not just talk about this particular example. If anybody was holding this stock right now,
I'd say keep holding it.
you just let it run, wouldn't you?
Yeah, I'd have my strategies on it, and I'd have my exit strategy worked out, and I'd be holding it.
But we also talked on the show,
Yeah.
and I've talked about this in our training recordings that we do each week for the students as well, is that the challenge is that when a stock moves off on an angle like that, you know that at some point it's probably going to come back to the angle of that line.
But that also doesn't mean you need to sell it either. Because
Well-
I know we did a whole recording last week with students talking about exit strategies, that you and me just sat there and did all of that and really outlined how to do all this sort of stuff. Even though they learned it in the course, we just added our experience to
Yeah.
that sort of stuff. But this wouldn't worry me at the moment if I was in this stock.
because you've got a profit, it's looking really nice and strong. But I guess this is where people have to trust the trend lines, don't they? 'Cause
Well, they've got to trust themselves, and that's the big thing. Is I find two big issues that people have is, one, they don't trust themselves,
Yep.
and the second thing is they don't trust their rules, and so they make mistakes by exiting stocks too early because they've gone up 10% or 20%,
Yep.
or they hang
trying
on
to get out at a percentage.
yeah, or they have losses of 30, 40, 50%, like the other gentleman I mentioned. And that's what I was saying earlier. They don't realise, if you sit down and wrote it on paper, how much this has cost you. I asked one of our students today to go back to his super fund, the guy I mentioned, to, if he'd taken proper exits that he's learnt now, how much more money he'd have in his super fund. And I guarantee it'll be 30, 40 grand. That's what it's cost him by not having right
hindsight, isn't
rules,
it?
which pays for his course 4 times over. So
Yeah.
that's what I'm sort of saying here is, make the decision to do the right education and you'll get the returns. It's simply that. But
Well, look, we like
Okay.
the stock. There's no doubt about it.
Love it.
Good stock choice. And at the moment, it's still going up. So, you know, it's really your call where you want to set your stop loss right now, the trailing stop loss.
I love it.
All the
I
best
think
with
it's
it.
nice.
We hope it continues to do well for you.
Cool. Well, that's our thoughts on PLS. Well done, Janine.
Well, you've been asking us questions, and each week we ask you for your thoughts. And last week we asked, what stocks have you bought in a float? Have you added to your holdings in these shares over the years, and why did you increase your position? Well, Dale, it seems our viewers have decided not to respond. What's happening? I don't know. Maybe they've never invested in a float. Perhaps they all bought Telstra and don't want to admit it. If they picked up Combank, they would be pretty happy. And the point of the question is that with floats, unless they are the big, well-positioned companies, you're best to avoid them, because even if you do your research, what you need to understand is that around 50% of all floats end up trading below their issue price in the first 12 months. While stag profits can be made in short term in some floats, most investors have not prepared an exit plan, as Dale was talking about before, and more often than not end up watching the share price fall below what they paid.
Well, that was a bit of flop, wasn't it?
It was. It's the
You thought
worst.
you were going to get the
thought I was
opportunity
gonna
to
get
cover a
heaps of
topic on
comments.
floats, didn't you? You thought you were going to do that, but it looks
I was-
like,
yeah.
well, it looks like instead of getting or floating an idea, you hit an iceberg like the Titanic. Not even the band stayed around to play whilst it sank.
Yep.
As you've been outvoted by the nil response, haven't you?
Well, you don't say, and I get the picture, you guys. What will I say? I just have to say thank you so much to everyone who did comment last week. While I was disappointed, I still enjoyed reading your comments after the show, so keep them coming. This week's question is, what do you believe is the biggest stumbling block facing investors as they invest in the stock market? We would love to hear what you think, and you're also welcome to share what your biggest challenge is. We want to hear from you, so come on everyone, share your thoughts and get typing. If you're listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app you're listening to.
If you've enjoyed tonight's show, then give the teams a big thumbs up. That means clicking the like button underneath the video to let us know that you've enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we would love to chat with you. If you're not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in the subject line.
We really appreciate your support, and you can show yours to the show by subscribing to our channel and hitting that subscribe button now.
Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We have so enjoyed receiving all your emails, and thank those who called into the show. We love the opportunity to chat with you personally.
I love that deep voice that you've got tonight. But as always, thank you for joining us, and we hope you have a great week. But for now, goodbye, good luck and good trading.
Bye for now.